Okay, and we are live. Good morning, good afternoon, good evening, wherever you are. Welcome back to the L1X webinar. It's been a month, I guess. Leo, Mike, how are you both doing?
Yeah, good man. Thanks. It's definitely been a month. Yeah, exactly. So, but a lot of development going on. The team is still pushing as usual. So it's good. More updates coming soon. Cheers.
Yeah, yeah. How about you, Mike? Are you holding up?
Mike, you're muted.
You mute?
Yeah, that doesn't help, does it? Yeah,
Yeah.
I'm doing good. We've got some good updates coming, some other coins and things and tokens that are joining. So I think we're doing good.
Yeah, definitely. Maybe let's just get into it. Let me share my screen
Mhm.
and we'll go through quite a bit of updates today. We'll try to keep it within the hour. Let's try to go through it. Okay. Okay, can you see my screen, please? Okay, perfect. Okay, so Quantum DeX, let's start with that. Quantum DeX has turned 3 months old. I remember on the 2nd and 3rd of June, we did not go home. We were working in the office, um, you know, without sleeping. And since then, we have launched 39 pools, 7,000% plus average token growth across the primary listing, and more than $8 million of liquidity has been locked. Now, this is great because the job of a layer one is to build liquidity and, of course, to provide the infrastructure. And we've seen that in the last 3 months, we've been having compounding effect, not only on the number of pools, but also in terms of the performance, which is more liquidity coming on to the network. And along with that, we've seen certain token growth that it's very hard to find on other dexes over a period of time. So you do see certain tokens getting pumped, or the value of that going up dramatically high, but it's short lived. So we've got Biscuit, we've got Xtalk, we've got Avibo, and of course multiple other pools that have launched. And I think it all goes to show the quality of users that we have on Quantum Dex. You can't fake socials, you can't fake users and community that has been built around the Dex, and that is actually building the Dex. So that's good to see. More users and more adoption, more marketing coming for it. But I think in the last 3 months, we've done exceptionally well, considering so much of bug fixes had to be done over a period of time. So much of things had to be launched, and that takes me to the two tokens this week that were launched. That's Avibo and StackPi. So Avibo launched this week. They are building the first multi-chain, meme coin launchpad. I did have a look at what they have. Pretty interesting, and we have complete. We're going to give them complete support, whatever they need from our end to get this going. And simultaneously, I think it's great that multiple other dexes or launchpads come up on the protocol as well. And I think that brings in more liquidity for us because we're not the only ones trying to onboard projects after that. We've got different providers and different partners trying to onboard projects. More flow of liquidity, culminating into our liquidity pools. It could be for Uniswap, it could be for Quantum Pool, it could be for the release pool, and again, more adoption over there as well. We also have StackFi. So StackFi launched this week with $2 million in L1X and $2 million in their own token, which is 4 million in total liquidity. And this is the first token that has got that kind of loan from us. And the interesting thing is they've got a very innovative DeFi product, and we're very willing to work with them. I won't get into the details of it, but it's to do with passive lending and leveraging strategies across the text that can be used. So yeah, some interesting projects lining up to list, and along with that, the team, Vivek and the team, they are continuously speaking to, I think, tens of projects to list with us. And of course, the timeline, what we have seen and what we have noticed by speaking to projects is that there is a longer conversion time, because not everyone is listing next week. Some of them are raising capital, some of them are in the development stage, but we have started building up the pipeline, and this pipeline is pretty strong with some solid projects coming up um, to list for the rest of the year. Interesting token, the Xtalk token, which had a community takeover. It went up by 112,000%. Mike, earlier, did you guys get into this?
I got in a bit late, but I don't regret it at all. And the way the community has taken it over, yeah, I was surprised.
Yeah, no, I think interesting, because I think 2 days ago I saw it was at around 55,000%. Of course, the TVL is around $25,000, I think, around that. But yeah, I think more importantly, it's the stickiness. Like, users are holding, and it's interesting to see this kind of growth coming into the network. It also goes to show that the more the liquidity that will keep coming over a period of time, the more sticky that liquidity is going to be. It's not like the liquidity comes in and people dump and keep exiting. So pretty good to see certain tokens holding up pretty well since the launch. If we could attribute the top three things that we need, which is bringing in more liquidity, which will ultimately go into the release pool, more flow of investors or retailers coming into the DEX, on an ongoing existing user basis, and also more adoption of the DEX in itself as a whole, right? I think we had to, bring up something that would act as the unique selling proposition. And while we were speaking to the projects, of course, the first, and the most important one being your token is cross-chain compatible the moment you list on Quantum DEX. That was taken up very well. But what we have also seen is the liquidity loan model is completely unheard of, which does not exist, right? And apart from the fact that all new sets of contracts had to be built to get this going, if there was one thing that we could put forth and say that because of this we had that kind of traction on the DEX, is, I would say, the liquidity loan model. Because while we are speaking to projects, the clear distinction or the differential point that you see, for projects listing on Quantum DEX versus projects listing anywhere else, is the liquidity loan model. And just to take an example of StackFi was on Base, and they're actually delisting from Base and coming to Quantum DEX because of the liquidity loan model, and of course the community around it as well. So it's pretty interesting, and of course we have it full-fledged launched as well. You can go into the portal, and from start to the end, without any manual intervention, you can borrow liquidity and launch your own pool, which is completely unheard of, and which is what we mentioned previously as well. This completely acts as a catalyst to bring in more liquidity, more investors or retailers, and of course more adoption as well. It's a very straightforward process that we have made it, and I wanted to go through this step by step, to explain how, more importantly, this is going to help us onboard the next 500, 600 projects on DEX, because that's where the fees will be collected. That's where more liquidity will be coming into the protocol. That's where more adoption of the protocol will happen. So what we have tried to do is we tried to set a benchmark as to what would happen if we could build something where projects could get a loan, launch with us, slowly repay the loan back as the projects keep performing well, and that repayment goes directly, a part of that goes directly into the release pool, and the other one goes into the market or to the L1X treasury. So we are trying to build a long-term debt strategy for the projects where we are trying to sell the coins at whatever the market price is currently. But of course, we also understand that the default rates for this could be pretty high. But again, as I said, we have introduced mechanisms to track the risk. We have introduced mechanisms for repayment and rotating that money back to other projects. So, of course, the default rates could be high, but we are focusing on the quantity of projects over here as well. That's also, key to understand. And it's an indirect way of us selling the coins out to the market and filling up the release pool or even, the treasury. So the first one is you mint your own token on L1X. We've seen community members, we've seen over 350, I think, tokens that have already been minted on the protocol. The second one is you go to the loan dashboard, you apply for the loan, you put in your amount. If you are trying to get more than $25,000, that's when you have to apply, and we are going to increase that base number gradually. So less than $25,000, you can start it up straight away. Once you confirm the loan details and the repayment schedule, which is 6 months cool off and 24 months, the loan repayment according to the monthly, you accept that, and then you deposit the collateral. So the collateral is set to 1:2. So you've seen projects launch with their own token for the very first time, and you set the price and you launch your pool. All this is jam packed within 10 minutes. Like, from the ideation that you want to mint your token to actually launching your pool and people buying into your pool has been completely automated end to end. Smart contracts, the repayment contracts, each and everything has been automated, and projects can launch in 10 minutes. And even to the fact that we've actually, heard from projects that it's too good to be true. Like, what is in it for us? And I think what is in it for us, we're trying to build a longer term strategy over here, to get more liquidity into the protocol. As I mentioned previously, that will go into the release pool, that will go into the treasury. Of course, the default rates will be high, but we are also focusing on the quantity over here. And we've seen multiple projects that are already doing well on the DEX with the loan model as well. Now, just to understand how this thing works, and I think one of the things over here is, increasing the liquidity is one of the most important thing for us. So, of course, but apart from that, also the fact that users coming into the DEX shouldn't feel that because they could borrow the loan straight up from a process that these pools are secure, right? So what we have done is we have introduced a new type of technology where the smart contracts or the liquidity pool is divided into two different parts, and all this is visible on the website. You can click on any pool and see all this information. So what we like to call that is a dual layer liquidity model. Now, until today, this has not been introduced. Until today, all you have seen is an automated market making model where liquidity sits down, and there is no differentiation where a project launching their token can rock the whole thing. So if you start your pool at $1, for example, and the price now is 1.2, where 20% increment has happened, what if somebody dumps? Should the price go less than $1, or should the price be at $1 as a base price? So that's what we have introduced, where the projects will not be able to dump all the coins. So there is a protected base liquidity, which is the anti-ruck feature. So you can be assured that the price of the coin, if you come in at the beginning, right, is not going to go lower than maybe -3 or -4 or -5%. That's the maximum or the least it will go to, right? It's not going to be -99%. And as an evidence, what you can do is you can go to Quantum DEX right now, and you can see wherever there are meters, wherever you see this meter, along with the liquidity pool, these are the pools where they will not be dumped, where more than -5% won't go through. But you look at the other pools which don't have this feature, some of them have gone down to 99% than their trading price. And the other layer to this specific model is the free market liquidity. So let's say a pool is starting with $1 million in L1X and $1 million worth of their own token, and the price is set to $1. What's going to happen is any liquidity that comes on top of the base liquidity is what will be traded, what will be used for entry and exit. The base liquidity is always protected. But why do we have the base liquidity? We have the base liquidity for two different reasons. One is providing the least amount of price impact and better slippage for your specific trade. That's where you need liquidity. That's the whole reason people or projects went out there and offered high APRs. And the moment the APRs were lowered, people remove the liquidity, and that's the mercenary capital debt cycle that starts for the project. So this whole dual layer liquidity model has helped us go out there on board projects much faster. We also have something called as the risk indicator guide, and the risk indicator guide basically is for the users. Now what happens over here is, if it's in the blue zone, if it's in the cooling off period, the repayments have not yet started. So the repayment cycle is 6 months cool off and 24 months repayment. The green indicates that the repayment has started, but the project is paying back all its installments on time, right? So that's a safe zone. That's the safest zone for the project. The yellow means they have missed 2 months of payment consecutively, right? So with the users, you'll know that, okay, if you're trying to buy a specific token and the project has a yellow indicator, that means the project is missing payments. They're not making the payment as they should be making. That's a risk for you as you want to invest. And the red is missed 4 months of payment, high risk of loan default. Now, this specific area is where you don't want to buy that project though, because if they miss 4 months of payment and the next month is also missed, the loan is recalled and the pool automatically dissolves. So that is where it's not free money. They have to repay it back, and of course you can start it off great, but always look at this specific indicator as a Quantum DEX user. And this is the indicator I think we're pretty proud of, because although on one aspect we wanted to allow projects to borrow liquidity and launch fairly, on the other side we don't want users to be carried away by seeing $1 million in liquidity there and thinking it's going to be safe all the while. So this definitely helps. And of course, this specific icon over here mentions that this is a dual layer liquidity model. Right now, of course, there is no form of payment the projects need to make when they are launching their pool. But moving forward, right now we've got 39 pools. Probably after 100 pools, there will be two different fees. One will be a listing fee that will be charged for the projects, and the second one will be an application fee for the loan amount. So if you are trying to borrow $100,000, there will be application fee in between 1 to 5% that you will have to pay to borrow that kind of liquidity as well. So that kind of deters projects to over borrow than they require, and that's also one of the reasons why we have kept it at $25,000. So of course it is the Web3's first liquidity loan protocol, and this has been taken up very well by the projects. Like the projects have that want to launch. Like we were speaking to one of the layer one yesterday that's launching. That's kind of feels like they copy pasted a lot of things from us. But anyways, they're launching. They raised some money from launchpads, and the launchpads rolled them over. They didn't get the money from there, and now they don't have liquidity to launch. They've got a product, but they don't have liquidity. So that's where these kind of protocols, they help for projects. Like we would have loved it if we had something like this back in January, right? Rather than building our own liquidity. So it does allow projects to borrow. It is rug proof. Of course, fair swaps between the DEX as well, cross-chain ready and AI optimized. We will have certain features coming on the DEX, such as your portfolio. So if you buy in, you will be able to track your own portfolio in there. Are you in net? Are you in minus? Based on when you buy, what the current price of the token is right now. So giving you a good picture if you bought 10 different tokens, you don't know what you got it at. You bought multiple times. You sold it at multiple times. So you'll be able to have a good portfolio view of that as well, which you can subscribe for and start using that. And one of the other thing is, there are users that are cashing out from the release pool right now. We've been every day, almost every second, third day, we've been getting claim requests. Users are cashing out. And the other part is we've also increased our liquidity on Uniswap to around $225,000. So that's good. I think that really helps because when users try to come in and try to exit, the Uniswap liquidity is now used for that, which we'll go through in the roadmap in terms of what we have completed. We have been actually, we've been working with few influencers out there, few marketing agencies, of course, very, very particular in terms of, how we want to approach this in terms of the ROI, not giving out free money, but specifically focusing on, user coming in. And a bit of guerrilla tactics are going on other Discords to make sure that users come in. But there are a couple of influencers. I've just put down two over here. There are a couple of influencers who have launched their own token as well on Quantum DeX. I did have an opportunity to look at the whole flow. If you haven't, I definitely recommend have a look at the whole flow. It's extremely, extremely accessible and simple to launch your own token. So rather than influencers talking about it, we decided like you launch your own token. I think that creates a better show of faith in the technology rather than just speaking about the project. And the users on Quantum DeX, we want to give out certain numbers, but it's too early in the day. But the users on Quantum DeX are increasing. The liquidity is coming in every day. People are swapping into L1X, and if you just go to Quantum DeX and look at the transactions, you can see right there. I did also have an opportunity to speak with Jack Newald and Francesco as well in terms of the Quantum DeX features and what's coming on to layer one. And I'm trying to get out more as much as I can, but making sure that I don't get on certain podcasts where we shouldn't be, handpicking them, getting out there, explaining about it. And, gradually, we are increasing the users on Quantum DeX. The liquidity is increasing. The release pool is throwing out claims, every specific day. There are projects launching on the Quantum DeX. I think as a whole, in 91 days, I think quite a bit of things have been achieved overall, if you think about it as on a comprehensive manner. In terms of the roadmap, we try to, a little bit more optimize the roadmap, removing all things that we don't want to show you in terms of that doesn't matter. So on 12th of August, we did launch the AI loan model, which has been automated from start till the end. There has been the upgraded L1X Explorer. So we are always happy to take your feedback on the Explorer as well. But if you see each and every specific thing is there on the Explorer, token holders, token movements, everything can be tracked in there. At the same time, what we have also done is we have integrated the L1X swap, WL1X with the Uniswap pool. And what does that mean? So anytime any user is trying to swap into WL1X, if it is in the specific price impact, it will route the trade through the Uniswap pool. Meaning, when the foundation is issuing out WL1X, it is only accepting L1X ETH. So the user has to buy L1X ETH from the Uniswap pool first, give it to us, and then WL1X is issued for the user on the L1X network. With this in mind, we have seen, if you go, the volume has increased. We have seen certain trades happening on a daily basis as well. So that is good news. And if you give it a little bit more time, if you've got 50, 75 projects out there, and every day you have a net positive demand coming into the coin, the Uniswap pool is integrated with the release pool. So when the user is trying to swap into WL1X and creating a net demand for WL1X, the demand is actually indirectly going to the release pool as well. So that specific cycle has been tied to now. So when more projects launch, when more demand of the coin comes through, you'll see more release pool activity out there as well. So that whole cycle has been tied now. You can go and try to do a swap in L1X swap, and you'll see the liquidity has come from Uniswap. On 15th of September, we are going out with swapping from any network or token to the Quantum DeX token directly. So right now you have to swap into WL1X on the L1X swap, and then use that WL1X on the Quantum swap to swap into the token in and out as you wish. But now from the L1X swap directly, you'll be able to buy the Quantum DeX token. So you don't have to go through the WL1X route. It will all be handled for you in the backend. Of course, it will swap into WL1X first, but it will all be handled for you in the backend. Task on integration is going on. It is taking a bit of time. Quite a bit of things has to be done over there, but it is in the process. The custom price range, module where you will be able to add liquidity and into a custom price range, and also see different kind of liquidity at what price range. That specific feature is also being worked on. It has been demanded by the community. Certain members reached out to us for that. So we are working on that as well. As I mentioned, concentrated liquidity tracker, so you'll be able to track as well where the liquidity is situated in that specific pool, helping you to make a better call in terms of if you want to put liquidity into that or not. On 15th of October, that's when we're going to go out with community voting system for pool launches. Well, the QED tokenomics, where you will be able to go in and vote for a specific pool and give more rewards to the users for trading on that specific pool. That voting system is to go out. And one of the most anticipated feature is making Quantum DeX mobile compatible, right? So instead of going on native iOS and Android app, which is going to take a lot of time, what we're going to do is we're going to make the web view version mobile compatible first, right? And based on various feedback from there, we're going to take that information and then go and build the mobile app. L1X app doesn't have a mobile app, but we are very keen to start working on one once we have exact feedback, because the development time and the cost to build a mobile app, if you're continuously iterating it, is very expensive and time consuming. So we need to know exactly how we want to position the mobile app, what kind of swaps to have on the phone as well, because it's going to be more than swaps, right? It's going to be on rail and off rail as well, in terms of on ramping and off ramping with your native coins or your fiat to native coins. On 30th of October is when the L1X swap and quantum swap will be directly integrated into the X wallet. So one of the reasons we want to do that is, many times we've seen people go to the website, and while tracking them, they go and sit on the pool and keep looking at the pool with the price. They've got multiple tabs open, with the Google Analytics data that we have. So what we're going to do is to push the adoption of the X wallet. We're going to make sure that you will be able to swap into quantum token, check your portfolio on the quantum token for the quantum tokens, and perform any swaps if you wanted to, not add or remove liquidity, perform swaps straight away from the X wallet extension, right? So, well, it will definitely help in terms of the X wallet adoption, because we haven't been pushing that too much. So this is a feature that we believe will, the mobile compatibility, having it on the Chrome extension directly, will directly influence the liquidity coming in, projects wanting to list, more retailers or investors coming into Quantum DeX, and of course, more adoption of it as well, circling up all that. A few other updates apart from here, from the roadmap, we are working with CoinMarketCap and CoinGecko, in terms of Lionel is personally working with them on integrating the protocol, into the screeners, so that all the tokens that are listed on Quantum DeX can directly be visible on these screeners as well. That's number one. And in terms of the node rewards, I think Lionel has certain updates he'd like to share.
Yeah. So as Kevin had promised, any like the top 50 nodes who are performing and being active, there will be a $50 USDT reward that will be sent on BSC network. So we have already transferred it. I'm just sharing the link in this chat as well, just in case. Okay, so that will be posted on Discord by SP. So you can go and track for your wallet address. Again, I'm just making it clear. These rewards are based as per the UUIDs, right? Each FVN has a separate unique ID. So maybe there might be a single wallet that was holding 3 different nodes, that was hosting 3 different nodes, has received $150 in total, because there are 3 different instances running. So we have compensated, the cost of running the nodes very well over here. Yeah.
Yeah. Absolutely. Yeah, I think, yeah, so, the screener integration, the node rewards have also been paid out. You can check your wallet. PSC USDT has already been sent. And on a monthly cycle, that will all, keep going. And I think we're very glad to see that the node operators, we are, one more update was on the node was, we are working on resolving certain issues probably before the end of this month. Those issues will be resolved. um, and apart from that, I think pretty much our whole strategy for the for the whole quarter or until the end of the year is making sure that we push the loan model as much as we can. We increase the number of swaps, because by doing these two things, by pushing the loan model and by increasing the number of swaps, we are targeting three different areas. One is bringing in more liquidity, bringing in more retail users onto the Quantum DEX, and bringing in more adoption across projects and users for the DEX, which results into more liquidity coming into the release pool, more liquidity coming onto the protocol, creating more validation for it. And at the same time, we are not leaving any stone unturned, even with the screener integration, mobile version compatibility. So rather than going and building more features, we are just building features around what our core focus is right now, which has been the swap and the loan model, to push this forward. And a special thanks, Vivek is not here and the team is not here, but a special thanks to them. They've been working continuously to build the whole pipeline of projects. We've got more than 35 to 40 different projects in the pipeline, launching sometime this year. All great projects. And I think if there is any other feature that you will like to see or like to have on Quantum DEX that's going to make your life easier, as you think it's going to improve more users, more adoption, please let us know. We will be more than happy to have a look at those features. Yeah.
Sorry, Kevin, I'll just give one more update. So, many of the community members have been, raising concerns about the RPC. So, yes, we are working on it. And as Kevin said, by end of this month, we should be able to give you all a better experience over there.
Yeah. Thanks for that. Okay. Yeah, I think Mike.
Yes, I think we're making some brilliant progress there when you start talking about the mobile compatibility on the in October, and liquidity, the projects, the loan model, how that's all working. I think it's starting to come together, which is really good. So going back to the markets, I think, and we'll scroll through these couple of charts, but Bitcoin has remained under quite a bit of pressure this week. And we saw 110K tested, and the price is still moving towards that mark. But I think it's going to consolidate more below the 110,000. And I think the driver behind that, from what I've been reading out there, is around rumors of a new cryptocurrency regulation laws in the US. And as well as, this is an interesting point, is that there's quarterly rebalancing that occurs by the portfolio managers. Now, why is that important to us? Well, it's actually showing the adoption of crypto across financial institutions. And you go back a number of years and it wasn't possible. It is now. And that's where we're starting to see it. And as we start seeing crypto becoming more mainstream, that will have an impact on things like the interoperability of those existing tokens. Comes back to L1X. So that's where we believe things are heading in that area. The other interesting thing is that there's been a lot of a significant shift in trader interest from Bitcoin across to Ethereum. Now that's really probably more around the retail and higher end traders rather than institution, but we are starting to see that. And it's a bit hard to say whether that's maybe it's a bit too early to say it, but we're starting to see that that influence coming out there. Interesting. We move on to the next chart, Kevin. We look at the this is the global uncertainty chart, which our market maker provided across, showing two interesting points around Trump tariffs and the Israel-Iran events that happened, and where we're actually starting to see it now around that the global uncertainty around those two events, and now we're starting to see that decline back down. So there's getting a lot more stability out there in the markets. The next chart is quite an interesting one they sent through, which was the Fear and Greed Index, showing that it's one that they market. They put out there to show where they feel people are at in the emotions that are driving the market right now. So we're seeing greed, not extreme greed, just greed. But hey, it is capitalism. So what do we expect? Now moving on to the next chart. So we look at L1X. I think Kevin down. Yep. So the interesting thing here is this is a trading view chart I just captured just a few moments ago while I was sitting here, showing we're up around $20.13 at the moment, showing L1X as a strong buy. That's on trading view. That's quite an interesting view of things. Come on there and have a look yourselves. You can actually produce a lot of analytics around that, especially in technical analysis, if that's your thing. Now, despite the significant Bitcoin correction that we had, L1X has actually been holding up better than the market, and that's going to continue. I think there's a lot of stability there. And one thing to remember, yes, we've got the meme coins, we've got Biscuit, the cat, they're memes, and a lot of other projects are focusing on, people focus on price. As a utility coin, the most important thing to us is stability. So we're keeping, to keep that price in a range is actually really, really good. It shows the confidence people have in the market and in L1X as well. There is a shift moving back to the market towards some altcoins that is starting to fade now. I don't feel that's going to have much of an impact on the L1X price anytime soon. As I said before, our price has been pretty neutral around about the $20.13 mark. We do see a few little spikes here and there, but nothing major. I think it keeps quite stable, which is good. And back to you, Kev.
Yeah, I think I'll just stop my screen. Yeah, I think for the last 4 weeks it has been very interesting because the hardest thing for us was to narrow down the focus and not get distracted by any new features. And I think for the rest of the year, that's exactly what we are going to do. And since the start of the last 4 weeks, we narrowed it down to the liquidity loan model. It has definitely helped the team get more acquainted with it, because what we have seen while we are speaking to projects is that interest around, I want to launch on Uniswap versus I want to launch on Aerodrome, Velodrome, or any drone out there. It's more towards what can I get compared to if I want to depend on any other exchanges. Because I try to give this analogy where previously you used to go to Uber Eats or DoorDash because you wanted to find a new restaurant. Today you know about the restaurant and you go on DoorDash or Uber Eats. And that is exactly what is happening with the DEXs out there as well, where projects launching today are getting nothing out of these DEXs except a way to buy and sell, and that's about it. But on Quantum DEX, of course, they will get more views, because more quality views, because the number of projects right now are lower than the other DEXs, but it's picking up very fast. And the other important bit is the liquidity loan and the swaps that they can get, because they don't have to hire developers to figure out a way as to how do I make my token cross-chain compatible, and the fear around me listing on a new DEX, which I heard from the projects, was not a lot of new layer ones out there. I think even, I'm not going to name names, but many of them don't have a way to go in and out of their ecosystem, right? So, and if there is only one way to go in. You can't go out of the ecosystem. So that has completely been opened from day one on Quantum DEX. So we've seen that being taken up by the projects really very well. Apart from
sorry, mate. I was just going to add in there, when we started the conversations with one of the projects that's just launched, it had some very interesting conversations with the guys over in Canada, and he was saying about how they had such fragmented liquidity, and it was just really it was destroying their token and their projects. And by moving across to us, it was an instant decision for them to move. And it's good to see that they're now live, so which is really good. But that liquidity, that's a killer, as you said earlier in the conversation, Kevin. Being able to consolidate that and being able to enable their users to go cross chain, it opens up the doors for them.
Yeah, I've seen a lot of DEX emails looking at our white paper recently. I think there has been some kind of interest in figuring out how are we setting up the dual liquidity loan model, and it's and of course it's an innovative piece, but it's a very obvious one. Like this, I mean, this completely makes sense. Why hasn't been this done before? And when I was speaking to this layer one who's also thinking to build their own decks, they're like, is this open source and can we copy paste this whole model right there? So it's definitely getting interesting speaking to projects. And I think I think our strategy is good. We're focusing on projects, getting them used to the load model, them launching up slowly, bit by bit, the liquidity going up. You see, Uniswap is $225,000 today. 4 weeks ago it was $45,000. So that's 6x liquidity, and we vision it to grow. Keep growing every fortnightly, every month as well, and that brings in more validation, more trust to these projects as well. So before we used to go out quite a bit to hunt for projects, but now there are so many projects that we don't have the manpower to handle them, and that's why this whole automation thing is what is going to take us from those 39 to 390, 400 pools in the next few months. So it's very exciting to see the DEX hasn't failed us. Like, it's been working continuously. It hasn't failed, and I feel all the cream of the community that we've got get that model completely. And it's projects like of course you've got Biscuit, you've got GDAO, you've got M1X, you've got Avibo, you've got Xtalk, you've got Spawnstar, you've got so many that have initially understood this concept, and because of that you see the value of their coins today, right? Like, if they had launched on any other DEX, I don't think that model would have worked, right? But yeah, it's completely the community's support onto the DEX that has brought it to where it is today, and the liquidity also increasing. Like, you can swap in and swap out anytime. There is no lock, there is nothing. Like, you can make money, exit out of the L1X swap from WL1X to wherever you want to go, straight up, right? But we do see people understanding that there's a lot more to come to this, right? We're just getting started with it. We don't want to over engineer the UI UX of the DEX and make it more complicated. We've kept it dumb simple, right? And yeah, special thanks to the community over here that have completely trusted in it. And that cycle around more people buying WL1X from the Uniswap pool, and then the release pool integrating with the Uniswap pool, but at the same time making sure that there is enough liquidity if people exit for the price to be stable so the pools don't lose the value, along with making sure that the loan model works flawlessly so that even if one pool doesn't operate correctly according to the loan model, it doesn't impact the others. This whole cycle being built in the last 90 days was a lot of work from the team. And the community has been very patient and supportive, and we have seen the results that we get. And I think if we keep going the way we are, the way the liquidity compounded on Quantum DEX, that's the same way we will start seeing liquidity getting compounded into the release pool as well. Before you know it, that liquidity will start compounding, right? Because it doesn't take 5% of Web3 to exhaust the release pool. It's going to take much less than 0.1% to exhaust the release pool. And Quantum DEX and that cycle is the way, or a medium, to get that 0.1% at the price what L1X is trading today. Because you're not thinking about the L1X price, you're thinking about buying the project token. So you're swapping into the project token while swapping into L1X indirectly. Yeah, so quite a bit of things happening, and we're continuously grinding it out over here, non-stop, tirelessly, and we're going to keep doing that. So special thanks to the community for supporting the Quantum DEX and putting it to where it is today, 39 pools, 7,000% token growth. I think, show me another DEX that has done that in 90 days, with the resources that we've got. But yeah, I think some good work has been done, backed by the community, and we'll keep doing that. So that's all from my side. Let us keep doing what we are doing, and we know we have to bring in more liquidity. We know we have to empty the release pool. We know that, yeah, right? And we are doing everything in our capacity to create a cycle that will endlessly keep going and exhaust that, rather than it being a one-off thing. It has to be a cycle for it to exhaust in the time that we want it to exhaust. Anything else, Mike or Leo?
Yeah, I think once we're out there on the screeners as well, like there'll be a lot of viewers looking for all these coins, and as you said, more traffic coming in, the liquidity will gradually compound, and once there's momentum, the release pool will be like very active as well. It's active right now as well, if you see, but the numbers that are going in, it's very tiny for the people, like if they're able to see the number of tokens that are out there in the release pool. So the big buyers will come in, and it will just go up gradually. Yeah.
That's good. I think some brilliant progress, mate. And let's looking forward to seeing the mobile version. There's a number of people I've been talking to have been looking for that, so it's good to see that coming along.
Absolutely, one firm step at a time. We're going to keep this space. We're going to keep working as we keep working. Without any pressure. We're going to keep delivering results as well. And to the community, you've been amazing. And this wouldn't have been possible without the community, like impossible. So yeah, thank you for that. And until we see you guys in the next one, thank you. Bye.
Indeed. See ya.